Now, let's discuss the top tips for paying off credit card debt. Quite simply, there is no one true best way to eliminate credit card debt, because each individual situation is different. You can do any or a combination of the things we've talked about. Pay off each card in succession, transfer your balances to one card, negotiate for a lower interest rate, or get a loan to pay off the balances. Whether you have a simple or grand financial goal and dream, paying off your credit card debt is a concrete step in the right direction. The following paydown tips and strategies will help you find out how to pay off your credit card balances. The first thing you can do is realign your budget. Begin by sorting through your monthly spending. For example, list down how much you spend on groceries, transportation, housing, entertainment, etc. Your credit card statement will be of help. Many card companies already do this for you by categorizing your spending. Next, look at the expenses that you can cut back on and reduce your spending. You can use then the money you've saved to pay off some of your debt. Stick to a budget and stay out of debt in the future. Make sure you build up an emergency fund so you have a fallback in case a job loss or health crisis ensues. Review your budget each month and see if you are spending within the set limits. After realigning your budget, try to cut or reduce specific expenses for a period of time. While you've been trying to pay off debt for a couple of years or so, you might lose sight of what other expenses you can cut. So rather than searching for what expenses you can cut permanently, look for temporary quick fixes, such as memberships, subscriptions, and bundled services where you don't actually need all of the products. Get in touch with utility and phone companies to see if your services are available for a better deal, or maybe you can downgrade to the basic package for the time being. If you haven't done so for some time, tracking down your expenses again might give you some new and fresh perspectives. As part of the former step, you also have the option to negotiate for a lower interest rate. Try this. Call your credit card company and ask them if they can cut down your interest rate. Who knows? They might offer you a balance transfer to a new credit card instead. Consider going through that option. However, while you might be paying less interest, you might end up lowering your credit rating. Carefully weigh the pros and cons of this step. If you're not about to apply for a new credit card in the next year or two, the balance transfer will be advantageous. Having a good grasp of the terms and conditions and understanding of how credit card interest rate works so that you know when your lower zero interest period ends and so that you can use the offer to the utmost benefit. The next tip is pretty obvious. If you will just pay the minimum amount on your credit card bills, it will take you an awfully long time to pay it off. Most card companies use 2% to 5% as your minimum amount due, which means that it will take you 20 to 50 months to pay for each charge on your card. So the opposite is also true. If you pay more than the minimum, you'll pay less interest overall, and you'll be paying off your card a lot quicker. Your card company will usually chart this out for you on your statement, so you can see how it applies to your charges. The simple solution? Pay a little bit more every month. Any dollar over the minimum that you pay goes towards your balance. The more you keep reducing your total balance, the more you reduce the amount of interest you have to pay. Another thing to consider is to use your savings to pay down debt faster. You might be one of those who regularly contributes to a savings plan. While this is good, you can also look at the angle that this money could help you pay for your debts. If you already have an emergency fund and are currently saving for irregular expenses, you may want to think about this regular cash outlay. You can consider suspending extra payments to Canada savings bonds or other savings accounts until such time that you've paid off your card debts. Use this strategy if you are not saving for anything specific, such as a kitchen repair. Think of it this way. The money you will save by paying your debts faster will be considerably higher than whatever interest you earn in a savings account. And if you ever get your hands on an income tax refund, pay increase, or other unexpected funds, then use them to pay down your debts as well. For even more ideas of where you can find money to help you pay off your debt, check this out. This showcases all of the places you can find money to save. Then use the money that you save to pay down debt. Last but not least, always pay attention to how you're affecting your credit. Having high balances on your credit cards isn't going to help you get good credit scores. As you may recall, payment history remains to be the biggest factor in your scores, but the second biggest item is your debt usage. In simple terms, it means the amount of debt you are carrying in relation to your total credit limit. This credit utilization ratio is going to change your credit scores. Finance experts suggest that you should keep it at a maximum of 30%, or if you are able, to an ideal of 10% of your credit limit to push your scores upwards. Here's the point. If you are maxing out your credit cards, that would certainly bring your scores down. That's it for now. On our website, you can find more posts, as well as calculators and other financial tools. How do you deal with debt? We would love to know your thoughts, so feel free to share them in the comments below. I hope you've enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial education videos.